What is going on? Welcome to another Tuesday Home Finance Hacks. And this evening, I should say, we have a simple but very important message that I want to share with you. That is the importance of disclosure. Disclosure is telling things exactly how they are, telling the truth on things, disclosing pertinent information, or even information that you may or may not think is pertinent for your loan officer to have. So it is your loan. Actually, let me start this over really quick. I didn't even have this thing recording. Sorry about that. So, welcome to Tuesday Home Finance Hacks. This Tuesday, we're talking about something that is really, really important, really, really key. And you might not think it's that important because a lot of people try and outsmart this system. You're not going to outsmart this system. So when it comes to you purchasing a home, you need to make sure that you are disclosing pertinent information, even information that you might not think is pertinent to you being able to purchase a home or obtain a loan, obtain financing to be able to purchase a home. You still need to disclose that information to your loan officer. And the reason is because the things that you are leaving out could be the very thing that ends up preventing you from getting the loan to purchase the home. I'm going to give you a couple of examples just that I know to be actual examples. A couple of them are actual personal examples of loans that I've worked, and some of them are examples of other people's loans as well. But for example, there's a particular individual who was trying to obtain a loan to purchase a home. This particular individual liked to remain private about things that they owned. So I'll pause right there and say, when you go to purchase a home, you need to, there's going to be certain things that your lender is just going to need to know and have information about. One of those things is all of the properties that you own. So when you own other rental properties, investment properties, even if you currently own your primary residence, your mortgage lender is going to want to know all the information about that. Why? Because one, if any of those properties are financed, they want to know how you've been paying the mortgages on those properties. Are you paying those mortgages on time? Because that's an indication of whether or not you're going to pay the mortgage that they're about to give you on time. Also, they have to count the expenses for those other properties in your debt to income ratio. So let's say you have another property, but it's paid off. You paid for it in cash. Even then, you still owe taxes and insurance. So if you've got taxes and insurance, that amount has to be factored into your debt to income ratio. And that can also determine how much you can qualify for the home that you're looking to get financed. So that's one of the things. But pushing play back on the story we were at. So we had an individual like to remain private in the real estate that he holds and everything like that. But this particular home buyer, he did not want to divulge what other assets he owned in as it pertains to real estate. So when asked, do you own other real estate? Do you own other properties? Multiple times, this particular individual would lie about other properties that they said they did not own, but they actually did own. So I'm going to tell you right now, a mortgage lender is going to pull a report and they're going to find out whether or not you own other properties, because other properties are going to show up on that search with your name on the deed. So if your name is tied to the property, not your business name, if it's in your business name, then yep, you know what, it might not show up at all. But if your personal name is tied to the property, it's going to show up when the search is run. And that's going to come back and it's going to be like, okay, one, why are you lying about having other properties? We're not here to tell you how to manage your properties. We just need to know what else you own in terms of real estate so that we can factor everything that's required by us according to FHA or conventional underwriting standards, Fannie Mae, Freddie Mac, VA, whatever is required of us to be able to accurately account for. We have to make sure that we do that according to the book so that we can do your loan the right way. So needless to say, everything ended up coming out. This individual did end up closing on their loan, but it was not without some heartache and some headache, with this individual finally succumbing to the process of, okay, fine, I'll tell you about all this other stuff that I own. It's like, look, you're not going to have secrets when you're trying to borrow $200,000, $300,000, $500,000 from a mortgage lender. You're just not going to have those types of secrets that you're going to keep to yourself, because they're going to want to know all of those things. Here's another one for you. I've had individuals that have tried to lie about certain things that were on their credit report. So, for example, there have been individuals that I have worked with who have actually been dishonest about certain things that popped up on the credit report. Maybe certain things pop up on the credit report and they say, oh, that's not mine, that's someone else's. Okay, cool. We'll go with that. Or, oh, that debt, it shows that balance, but really it's been paid off. Okay, we'll go with this debt someone else's, and that debt has been paid off and it's not really yours. We'll go with all of that. Now, here's the thing though. Everything that you're telling a mortgage lender has to be proven to an underwriter. So if you tell a mortgage lender that this debt that you're reporting is not really your debt, but it's someone else's debt, that's got to be proven to a mortgage lender. If you tell or that's got to be proven to an underwriter. If you tell a mortgage lender that there's a debt that has a balance, a high balance, low balance, doesn't even matter. If it's got a balance on it, that means that the mortgage lenders have an account of monthly payment. But if you're saying that, oh, there's no balance on here, this has been paid off, that's fine. But understand that an underwriter is going to require that you provide documentation to substantiate what it is that you're saying. So if you say this debt is paid off, we're going to need to see where the payment came from to make the payments that paid it off. We're going to need to receive a statement from whoever the creditor is showing that it's a zero balance. And both of those things are going to be needed. So everything that you're telling a mortgage lender, I've seen it and I've heard of it from other mortgage lenders, including having heard it with my own ears from clients that I've worked with who said some pretty wild, crazy stuff pertaining to things on their credit. It tends to always come back to credit. But in any case, when those claims are made, it is one of those things where it's like you need to be honest. You need to be upfront, because everything that you're saying is going to have to be proven either via a documentation, or actually really only via documentation, because it has to be some sort of written documentation from a creditor, bank statements, something that shows that what you're saying is what actually happened. And so this can cost you, and it can cost you big. Here's how. Let's say that you think you're getting away with this string of lies and we're going down your loan process. You're not going to get that final approval until everything's signed off. There's this one thing in your, typically in a lot of contracts, called a financing contingency period. That is a period of time in which you can actually obtain financing for your loan. If the length of time that you are lying and dragging this thing out exceeds your financing contingency period, then you are now at a point where once your lies catch up to you, you can no longer get your earnest money back. The earnest money is the good faith money that you put up when you first sign on to the contract that just shows the seller that you're serious and wanting to purchase this home. So some people put up $1,000, some people put up $5,000. The amount varies, but in any case, it's usually, thousands of dollars that someone's putting up in earnest money. Once you pass that financing contingency period, meaning that you're past the period of time that your lender has to finance you for the loan, then you no longer get that earnest money back if your lender can't finance you. And if your lender can't finance you because of lies that you've told and did not, and you try to carry that on or whatever it may be, then that's something that's going to end up hurting you in the end. And I know this is not going to apply to a lot of people out there. There's a lot of people that, you tell the truth. And I would say for the overwhelming majority of people that I work with, 90-something% of people out there, this is not an issue for them. This is not something that they deal with. They are upfront, they tell the truth, and it plays in their favor. But for that, smaller percentage of people out there that want to lie about certain things, or they don't want to be upfront and honest about certain things, I just want to tell you now, tell your lender everything, because that's going to help them better navigate which way to go in terms of your home loan. If it's better for you to take this route and go this direction, or if it's better for you to take this route and go this direction based off of the information you tell them. And the more information that you give me, the better that I can look and see, okay, this is going to be your best option and here's why. And then I can present to you several options and explain why I think this one will be the best. But if you're not giving me accurate information, I really can't help you. And especially after you get under contract based off of inaccurate information, that's going to be something it's only going to become worse and possibly more expensive for you as well, because not only is your earnest money on the line, at this point, you've probably already spent money on a home inspection, which you're not getting back. You spent money on an appraisal, which you're not getting back as well. And the last thing that I want to say pertaining to this topic, there's this thing called mortgage fraud. You don't want to commit mortgage fraud. What is mortgage fraud? It's simply lying to get a mortgage. Fraud is something that is fake. It's not true. It's a lie. So you are lying on a mortgage application. You are lying with whatever it might be for the purposes of getting a mortgage, a loan for a home. That is mortgage fraud. Mortgage fraud is an offense that you do not want to commit, because you definitely don't want to be paying the penalty for it. So all of that said, make sure you're just honest with your mortgage lender. Divulge everything up front. Make sure that you are, keeping it 100. Keep it 120. Like I said, even stuff that you might not think is necessary or whatever to divulge to your mortgage lender. Your mortgage lender wants to help you get the loan. They are not trying to block you from getting the loan. And the reason is because they are not paid off of giving you good information. They are paid when your loan closes. So your mortgage lender wants you to close on that loan for the home, but they need to make sure they go about it the right way. And knowing all the truthful information up front is going to help them navigate what the best way is for them to go about getting you approved for that home loan. So that's what I have for you. Make sure you tune in on Fridays. We'll be dropping another episode of Greatest Asset Community Podcast, and then be right back here Tuesday, 7 p.m. next week for another episode of Home Finance Hacks. Till next time, take care, be blessed, and we'll see you next week.